The following is a presentation of TFNN. The Bull Bear Nadex Options Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Bull Bear Nadex Options Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 215. Nasdaq is off 42. S&Ps are off 20. Gold contract flat. $12.31 an ounce. We have silver up 3 cents, $14.74. Light sweet crude down a buck, $70.93 a barrel. Notes and bonds. You get the 10-year note up one tick, 118.08. 30-year bond up 3, 138.19. Now both notes and bonds, folks. Did it this morning, did it yesterday, rejected lower price. The bottom line is that they still want higher price, lower yield. And it's going to get interesting because at 2 o'clock this afternoon, we're going to get the Fed minutes from the last meeting. We'll get an idea of what Jerome Powell and his team are thinking out there. King dollar up 277 ticks, trading 95.02. You have the euro trading at 115.40 to $1 US. The yen is trading at 112.10 to $1 US. What's going on, Tom?
I got it cranked all the way up.
Okay, I know I got him out here. Well, let's go over to our man, Mr. Kevin Hinks at TD Ameritrade, as we do each and every day. And don't forget, folks, Kevin, Tom White, his team got an outstanding program, 11 to 12 Eastern Standard Time. Now, no matter where you are, folks, okay, if you happen to be in the West Coast, driving down the beautiful coast you have, remember, you can get us right on your cell phone. Just go to TFNN.com. If you haven't test driven yet the Thinkorswim platform, outstanding time to do it. We have fast market here. We have earnings here. We have the most wonderful time of the year here. The way you do that, you come over to our website at TFNN. You'll see the Thinkorswim banner right there. Hit the banner. Bring it up. They'll allow you to trade with paper money. You can follow Tom, Kevin, and his team as they put on paper trades each and every day. And this is the time, folks. Right now, next 6 weeks, big action. Kevin Hinks, what's going on?
Good morning, Tom O'Brien. How we doing?
We're doing good, man. You know, bottom line is that, just as you said yesterday, I mean, you talk about action, just blink. It's just like the weather in Boston, man. Just wait a second, man, and it's going to change.
Yeah, exactly. I mean, IBM is obviously weighing down the Dow today. Netflix, that was a pretty impressive number out of Netflix with their new viewers. So, you know, I'm looking at my page for earnings the rest of the week. You know, we've got some good names. Obviously, Netflix and IBM were big names that came out last night. United Airlines take good news. We've got PayPal coming out later in the week. We've got Abbott Labs, some good names. Still a little light. We're getting into the heavy ones. Next week really starts to pick up pace. So, Tom, as you know, this time of year, it starts off with a little bit of a whimper, and then it comes full throttle by next week.
Hey, that IBM deal's pretty intense, huh? You know, what happened, folks, you know, IBM, you know, this is, I don't know, it's their 14th quarter that they're having problems. You know, but looking at those numbers, which actually, their cloud is what really, I think, people are looking at, like, they want to grow the cloud, folks. And the bottom line is that when you look at IBM, their numbers versus, you know, an Amazon, it's like, oh, my God, it's like not even close. It's like pretty amazing, actually, you know.
Right. IBM is got the difficult task of transitioning a company to the cloud.
Yes.
Right? And that takes some time. But they're moving along on their path, you know, and they'll get there. And the CEO was on yesterday, and he was pretty positive about their ability to get there where they want to go. He blamed a lot of, you know, their problems this quarter on the higher dollar.
Okay.
And, you know, Tom, you're going to see a lot of that in some of these earnings. The dollar staying up at this level for as long as it has is going to weigh on some of these multinationals.
Yeah, good. I hope they sell the thing off, man.
Yeah, I mean, you're exactly right. I mean, I think for a lot of people and, you know, traders in general, they didn't think it would go as high as it did. And they don't think it would. They didn't think it would stay up here this long.
Yeah,
and the dollar has been a very frustrating trade for some bears.
Oh well, you know, and you know, folks, when you take a look at this, we'll deal with the dollar index right now. But when you take a look at this, Each time that it gets to like 95 and 250, there's no more buyers. Each time it gets to basically 94, there's no more sellers. I mean, it's been a very tight range, man, and it's going to get intriguing. We know just from being around for a while, it's going to break one way. The real question is, which way is it going to break? Right?
Right, and I think it surprised a lot of people early this year when it broke to the upside. But Brexit has got to be figured out still. I think any resolution to that could really hurt the U.S. dollar. I mean, I think there's a lot of issues going on. That, you just need to see them come to the forefront. And I think I think people have been very patient with the U.S. dollar up here. That's for sure.
Yeah, no doubt. And of course, what we're doing now, we get weekly and monthly option expiration, right? Coming in Friday.
Big one this week. You're right, exactly. So a big October monthly expiration, that always brings in a little volume, right?
Yes.
So, and you're in earnings season, so yeah, always a fun week.
And folks, if you haven't listened to Kevin's show, it's an outstanding show. But let me just give you an idea that when you have a market like this and you have option expiration in the same week, I don't know what the numbers were on whether it's a SPY or the Qs, but I can tell you something, folks. When you get a market like this, these options trade penny wide. And when you get, that move there, Kevin, was so freaking cool. And in the indices, right? And I'm sure in the option market, that's when you get that explosion in price because you only have 2 days, 3 days left to option expiration, which is, and I've seen it before, and I suspect we're kind of in that deal maybe next couple of months. I mean, because it seems like once volatility comes in, it doesn't just go away. We got it for 6 weeks, 8 weeks. You got it for some period of time. Do you know what I mean?
Right, exactly. I mean, just look at the fact, Tom, that we rallied that far back, and the VIX is still above 18.
Yeah.
So that's telling you that volatility, let's put it this way. It isn't going back to 11 or 12 anytime soon.
Right.
Even if we get into a protracted upward move, it's still going to settle much higher than it did before. So you just have to readjust the way you're thinking. If you're looking for a 11 or 12 VIX, well, we'll see you next spring, maybe.
Yeah.
When that may come back into fruition, but not anytime soon.
Yeah, that's pretty cool because it takes that long to repair the damage of a fast downdraft like that, which makes sense. Well, why is someone going to sell insurance very inexpensively when you get a market that can, move 20 S&P points in about a heartbeat, right?
Right, but here's the thing that traders should take comfort in. Higher volatility brings higher premiums into options, which if you're a net option seller, brings higher levels of decay and more premium.
Sure.
So it's actually if you're a net option seller via covered call strategies or things like that, this is a great time for you.
It's big money. Yeah, there's no doubt. Listen, folks, every trading day right here, 45 minutes. Get right on your cell phone, TFNN.com. Hit Tiger TV. Kevin, you have a great one, safe one. Look forward to speaking to you. We're looking to listen to you in 45 minutes, man.
Mr. O'Brien, always a pleasure, sir.
Have a great one, man. Have a safe one. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials down 215. Nasdaq's off 42. S&P's down 21. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now is down 230. Nasdaq is off 47. S&P's down 23. So, Tom, it looks like the market went to Sherwin-Williams and they decided they wanted to get some red paint today.
It sure did. I'm not sure you weren't here at the beginning, but I said it's another volatile day, just in a little bit of a different direction than yesterday, right?
Yeah, there's no doubt. And, you know, when you take a look at some of the higher volume equities out here, well, let's start with Netflix, folks. So Netflix blew away the numbers, no doubt, huge numbers. That being said, the bottom line is that when Netflix is having a hard time, which is pretty wild, is that their last earnings. You know, they basically... They had a hiccup, they missed some numbers. That 385, though, that's when the equity had closed on the 16th of July at 400, and the following day it traded down to 344, and the high of that is 385. So it's going to be interesting, man, because if you know, you traded 380. Last night it was actually trading at 385, 387. But Netflix got to make it over this number, you know, and. You know, I think when you look at an equity that did so remarkable and they're selling it down at that price point, it's like it's a heads up, man. So.
Yeah, and also just in talking to Kevin even yesterday, right? He was talking about the expected move somewhere around $30.
Yes.
And it's only up about 20. So, you know, nothing too staggering in terms of if you were playing the option market, in terms of the premium that you had to pay. The market knew that $20, $30, even $40 was definitely in the realm, and that's where it went.
Yeah, that always is pretty cool how the option move, folks. It's not always accurate, okay? But the probability is pretty good most times, which is really just amazing. And the probability has to do with either way. It's not a one-way move, but it's kind of cool that when you put that much volatility into a structure, into an equity, our currency, bottom line, they move that. They move it, and they move it pretty quick. IBM, man, IBM is going the way of General Electric. Well, no, that's not of General Electric, but bottom line is that They have problems, man. This is
It's
going to
not
be
going a good way.
no.
Yeah.
This is going to be a monster ABC down, folks. The 8-point on this is the highs of 154, which was generated out here on the 3rd of October. The B is 138. You know, so bottom line is that you get what? That's 40. You get $16. So that gets you a 130. Well, we're almost there. We hit 133. That gives you a 130 price projection. If we do put this on a longer basis, let's see. So IBM reached its high in 215 bucks. Oh, look at this. Even on a weekly. Oh, this is intense, man. So this is going down. This wants to go to 116, man. And, you know, you don't hold 116, and this thing's going to be big problems. Let me pull this back 15 years. Yeah, because you know what you get sticking out here? You get 2016 sticking out. That has some big volume down there. And it looks like, well, actually, 139. Yeah, when you actually do this now on a weekly, we just broke this whole consolidation. That's trouble in paradise. You know, Tom, I was looking at the actual numbers. So the fundamental numbers, and this is what, you know, you heard me say this to Kevin. It was shocking that their cloud business, right, is growing by 10%, okay? And that they were looking at, that's a problem. They wanted that growing by 15%, okay?
Yeah.
But watch this. When you put Amazon up and you see what Amazon cloud business is growing, it's if you're watching Tiger TV, folks, it's the last one, Amazon Web Service, AWS. They're growing by 55% a year.
Yeah.
It's like,
that's remarkable. And they're growing at that level over the 3 years, and they have 2017 revenue of $17 billion to have that type of growth on that number. I'm not sure what IBM's cloud number is.
Yeah,
but
they didn't pull it out. But let me pull this back, because that's cool. They've seen the 17 billion. I'm just curious into. Yeah, so look at this. So when we put IBM out, they're not big enough to break it out, number one.
Yeah.
But IBM itself only does 80 billion.
Right.
You know, a year. So,
right.
You know,
and that's why they really should be growing much more rapidly when you're dealing with smaller numbers. 10% ain't going to cut it when Amazon's growing at 50% over 3 years at 17 billion. And that's the truth. I ended up, you know, I did watch that interview with Jeff Bezos from David Rubenstein, the Carlyle Group. Definitely interesting for people if they get a chance to check it out. And I know you talked about this part in particular, and him talking about how lucky / fortunate / you know, the smart business minds getting into that cloud, and that they had like a, what was it, 8-year, 7-year head start.
Right.
What Bezos said was basically unforeseen, and he's right. I mean, he went over how, you know, usually you have maybe a year or two when you do something, as in Uber had like a year, maybe 2, then you had Lyft, you know, come in.
Yes.
They had like 7 or 8 years, and you see the benefit of where they are right now, and that's why if a company is going to get into that lead that they have, they better start growing it more than 10%, because they're getting lost on the wayside.
There's no doubt. You know what's wild too, folks, okay, is that if we switch gears for a second, you go over and look at Sears, just talking about Amazon in general, it's amazing that Sears, you know, bottom line, depending on, Sears catalog, folks, was the biggest thing out there. I mean, Sears was the Amazon of the world, you know, in the 70s. And it's amazing that they just didn't shift. Imagine your Sears. First you had to send the catalog out, and it was the same deal, though. It's like, okay, we get all this different stuff we're buying, right? It's
right.
And they just didn't go digital. I mean, it's like a mind blower, actually. You know what I mean? It's like, wow, man, they got to be sitting there.
And that's where the logistics really is what Amazon does so well as well. That Sears would have had to just completely shift their business in terms of the logistics of having delivery in a day or two for free. That's a part that doesn't get overlooked, right? But that's the part easier said than done in terms of, you know, just like, I mean, Sears could have made that change, but to make that change, they would have had to figure out the logistics of becoming an online retailer, which is easier said than done. And you see the likes of even Walmart struggling with some of that transition, and they are probably second best to only Amazon in terms of the logistics it takes to run a company like Walmart.
No doubt. And that David Rubenstein show, folks, you probably can get it on the web, but it's on Bloomberg, and
Yes.
it's a great show. That Bezos one, though, in particular, I believe it's a full hour, is an amazing hour.
Yeah,
I mean,
it was a full hour, and
yeah.
lots of interesting stuff
Yeah.
for sure. So as we come into the break, right, we're coming back, we're going to have oil numbers. We got oil trading at like $70.63.
I like
Quite
it.
a number.
We get
We'll
some
get those
volatility. Okay.
That's right, man. That's
And
right. We'll
folks,
see.
you can check out the Nadex platform right on our website. Pull it up. They'll put $25,000 of paper money into your account, and you can follow along as we trade these defined option contracts. Because oil, no doubt, is moving around. And the bottom line is that the numbers, actually, when the numbers came out last night, oil went up about 3 or 4 cents. Stay
And
right
you
there.
got to love it. They
Yeah.
already got the interview. They got the YouTube link right in the den. Check out the den, folks. You got to love it.
Oh.
Pink D in there with it. Already rocking.
Love it. Stay right there, folks. Tommy and I are coming right back.
Jason Paff has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien. We do appreciate your growling and prowling with us out here. Okay, so let's see what they got. This is going to be interesting because it got close to the one last night. So you got crude inventory.
Watching oil. Okay, give them the first, and then we got quite a move going on in oil.
Cool. So you get crude oil inventories rose 6.49 million barrels. Gasoline inventories fell 2.02. So tell us, what do we got, Tom?
So the rise must have been more than they were looking for, because crude just went from $70.83. It dropped 60 cents in a heartbeat, just trading just barely above $70 now, $70.30. So maybe we'll get the expectation, but I am expecting that was more inventory than they were expecting on that number for the price to drop so rapidly.
No doubt, and that's bottom line is that's where these volatility trades come in real handy, folks, inside the Nadex platform. So let's see. Yeah, that's all that's coming across just yet. Oh, here we go. Yeah, the oil prices are extending loss after a big build in inventory. Yeah. Bottom line is that let's go take a look at the XLE. The XLE forever, like yesterday, folks, picture, you had a monster move up on the marketplace. Oh, there he goes. I got your screen now. Look at that. Oh, baby, look at that. That's a move, man.
Yeah, that's quite a little 5-minute bar we're looking at, right?
That certainly is.
Yes.
And so the XLE, bottom line, folks, is that you had a monster move inside the indices yesterday. All the indices are up over 2%. Nasdaq almost 3%. Bottom line, the XLE couldn't catch a bid. So it's saying that, guess what? We're going to be in a lower energy environment, even with the amount of political upheaval that we actually have happening right now. So gasoline right now is trading at 195 wholesale. That's down at 1.1%. And you get diesel at 231. You got action out here, man. There's no doubt about it. Oh, hey, listen, this is pot day, man. This is pot day in Canada, folks.
It sure is. It's not pot day to be an owner of the cannabis stocks, though, is it?
No, it's not. This is the classic. The day it happens, you know, Canopy's at 51, traded at 59 yesterday. You talk about some volatility, though, right? I mean,
yes,
they got volatility in spades. Let's go see what good old Tilray is doing. So Tilray out here. That's down $10, and that traded to a high of yesterday of 178. You're at what a move, man. You're at 148, and you were at 178 yesterday. Man, that's intense. That's
seriously.
That's serious intense.
It is. And I saw Bloomberg's going to have their CEO on at one point. It would make sense, right? All these companies using today as a promotional marketing opportunity. Pretty remarkable, though, to see the type of declines you're getting, right as they all get the green light to go fully legal in Canada.
Yeah, and what happens now, this is, you know, see, what's interesting here, this is kind of like what I would say inside the metals market, what can happen. And this is what happens, folks, is that inside the metals market, let's say either gold or silver, you find a big hoard of gold or silver. You think you do, okay? Then what ends up happening, it takes about 5 to 7 years at least to get all the permits to dig the mine, right? So first you find it. Once you find it, the market will recognize that basically, okay, you know, they'll believe in the CEO, CFO. They say, okay, you got a good find. We're going to start selling you up. But what the problem is that when you go from an exploration company to an actual producer, right, then that is the largest risk in the mining business. Because what happens, folks, is that two different things end up happening. Is that you've said what you think you can do. Now you got to come up with the amount of billions to build the mine, and then you got to perform. And that's where we are right now. Now, what's going to happen in the next 3 months to 6 months? We're going to see, you know, how these producers are going. Now they're going to be producers. Now it's going to be okay. What can you produce cannabis at? And you know, as we were talking about yesterday, Bruce Linton, who's the CEO of Canopy Growth, feels that you have to produce at less than $1 a gram in order to survive this environment when we're getting out of the gate. You know.
Yes.
So, it's going to be wild. So there's 28 ounces. No, 28 grams. Is it 28 grams in an ounce?
I believe so. Yeah.
Okay.
28 grams in an ounce, 16 ounces in a pound.
Okay. So 28. It says $28 an ounce. And then, depending what
or
they
to put
sell
it,
it
just
for.
call it 30. Just call it 30, right? And then you get 16 ounces in a pound. So what is that? That's 300. That's about 30, 61.20. You know, it gets, yeah, right. You know, in terms of for a pound, which is, you know, just small amounts in terms of what they can sell that for on the retail spectrum. Huge margins, huge once they get rocking, and that's why I think you see those types of multiples. But if anybody wants a quick lesson in just exactly what you were talking about in terms of that transition, a great example is Tesla in terms of all being a story of future growth, and then the problems you may have when push comes to shove, when it actually comes time to deliver on those promises. And we've seen the tribulations that Tesla's gone through as they've had to live up to the expectations that Musk has set for himself, you know, and that's the cannabis companies are going to have the similar fate. And I assume some are going to succeed and some are going to fail, right?
Sure, yeah. And then it's going to be interesting to see, like, how creative that they can actually get, because the weird thing actually is going to be, just like booze companies, you know, they're going to try to up demand. Right? I mean, that's, you know, so that's like, how does this work, folks? I mean, you know, they're going to try to up demand because they're in business. It's like, okay, so how do you do that? You know, you're going to do it, you know, you're going to do the advertising, you're going to make new products, you know, and what's going to catch on and what's not going to catch on, right?
Yeah. I agree.
Oh my God, I'm telling you. Hey,
and how about just jumping back to oil real quick? So right at $70 now. So the price dropping from above $70.80, and it's still ticking around 15 cents at a time. But we're sitting just above $70, and be interesting if we start seeing oil with a 60 handle, which we're only a few pennies away from right now.
Yep, and that's a big number, folks. And that's saying that, no, we got plenty of oil out here. And that's what what's intriguing here is that, you know, the dollar still doesn't have any movement out here. So, you know, we'll see.
Could you jump back to the oil news, the top live feed, to give the full breakdown as they usually do a minute or two after the numbers come out? I'm interested to see what that expectation was, because I'm guessing it was not an expectation of a rise of 6+ million barrels, which is what we ended up getting.
Looks like, okay, so the crude build was across the board in every region. Exports fell. So the export is a big deal. I was listening to Jason this morning, too. He was talking about the exports.
Yes.
You know, the crude build is much larger than expected. Gasoline stocks drew line.
If you keep scrolling down, I think you're going to find the full...
Production dropped 300,000 barrels a day as expected from the storm. That's even more intense, that you get production dropped in the Gulf of Mexico and they still had a monster build. Yeah,
it is. Yeah, so they haven't given the full breakdown.
Yeah, they're slow this morning.
They are slow. Lots going on. $70.02 now we sit.
Totally. Stay right there, folks. So we got our man, Mr. Teddy Cakestack, coming back. We're going to be growling and prowling. We're going to be talking markets. Stay right there, folks. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 288. You get the Nasdaq off 75. S&Ps are off 32. Let's go over to our man, Mr. Teddy Cakestat, as we do each and every Wednesday at 40 past the hour. You can find Teddy at trading at forex-trading-unlocked.com every trading day. That's forex-trading-unlocked. Teddy Cakestat, what's going on, brother?
Good morning, guys. How are you today?
Good, man. Good.
Morning, Teddy.
Well, you know,
Busy week in Chicago with the FIA Options Expo, Futures and Options Expo going on. So,
that's some good action, right?
Oh, absolutely. It started off yesterday, and today is a big day, and tomorrow as well. So after this, I'm shooting downtown, and it's going to be a long 48 hours for sure. So
Timing can be everything sometimes, right, Teddy? And man, they picked a good week for options and futures to be talking about.
Oh, absolutely, absolutely. Today, though, it's kind of crazy. You'd think it was like Christmas Eve or something in the currency markets because it just doesn't seem to really, it's rather lackluster, if you will. But I think we're poised. Remember a couple weeks ago, I was talking to you about how the carry trade is off the table?
Yes.
I think that that is now back on the table.
Okay. And, you know, so at 2 o'clock today, I mean, I suspect we're going to get some movement. We're going to get the Federal Reserve minutes from the last meeting. That could do something. And then, of course, we got Brexit. They're just hanging there. We don't know what day we're going to wake up and have action there.
Well, it's funny because yesterday I actually was talking to somebody from London, and they were talking about Brexit, obviously, because that's a big topic right now with the markets. And they're like, so what do you think? He's like, well, it depends on what time of day it is.
Yeah. Wow.
So yeah.
Let's go over this carry trade that you think is back on again. Tell us how this works.
Okay, well, I think that this is finally what's going to have pull the air out of the balloon that the U.S. dollar has been riding right now.
Okay.
So I think that the U.S. dollar Swiss, which we haven't talked about in forever, is going to make a play for parity.
Okay.
So at the 99-cent strike level is a key level to buy against, you know. I can see it being at parity within the next week or two. And that also means that the euro-US dollar also is probably going to get a nice little rally as well.
That's interesting.
So
okay.
I think it's going to break out of the range that it's been in.
Yeah, this range has been tight, man, right?
Yeah, between 115 and 116, it's been stuck there. But I got a very good feeling that the euro-US dollar by the year end, before this quarter is out, could be pushing the 122 to 125 area again.
Well, I like what you're saying, man. particularly for the commodity markets, because if that's what we get, folks, you will see a bid under commodities, which, you know, we really haven't got a bid under commodities. Yeah, I'm looking at the Swiss franc right now. So that's pretty wild. That's almost at parity right now. Yeah, but I can see what you're looking at. You figure the top of that range. Let me bring this back a little bit more. Oh yeah, this has been in this range for a long time, huh? Wow.
It's been stuck there, but now it looks like it really wants to push the parity level, and then you have the psychological effect of parity once it hits that level.
Yes.
You know, you're going to bring in a lot of the weak buys that'll probably press the market up to probably, I don't know, around another cent or two above that.
So what are you thinking about the yen right now, Teddy?
The yen right now, I think, it's stuck in a range trade between 112.50 and 111.50. I like those two strikes for either a bull or a bearish breakout.
Okay.
And especially above it. I'm leaning towards the long side right now. I think that you can buy against the 111.5, 112 area.
Yeah.
And make for a play above 112.5, which if it gets above 112.5, then I see it going up to like 116.
Yeah, that, you know, what we had out here, folks, you know, the last week and a half, when that yen, I mean, you know, it's amazing on this one. I mean, the yen didn't even get that much stronger, you know, by a few ticks, but yet the Nikkei took a conniption and went down 2,000 points.
Right.
The correlation between the Nikkei and the yen, I mean, we have a dollar, too, in our markets, but the Nikkei and the yen is pretty amazing, man. I mean,
absolutely.
That takes absolute conniptions.
Right.
So, you know, talk to me about the euro. So you're figuring, I can see what you're saying. This range and the euro, the top of this range right now is, I guess, 118, right? 117.9 or something. We break that and you get that 120, 124 on the agenda?
Absolutely, and I can see that before year end because that goes with the carry trade.
Okay.
So it's reinforced going into fourth quarter, you know. So, and especially now with the looming Brexit, obviously, like I said, from 1 minute to next, you don't know what's going on. But now you have Angela Merkel, who came out yesterday and basically told all the EU countries to get their budgets in line, you know. So
yeah.
Brexit, I don't think, is so much of a factor now as it is the EU stabilizing its political and it's also economic balancing, you know.
No, I can see that, you know, particularly because we've been dealing, it seems like we've been dealing with the European Brexit for like 2 or 3 years. I mean, you know, it's a long time, right? I mean,
right.
If they get anything straightened out, just whether it's good or bad, I think the market's just waiting to say, what is the answer, man?
Right.
Wild. Well, it's going to be a wild week, there's no doubt. And, of course, our own equity markets are having a tough time out here. You get the S&P down 32 bucks.
Well, you know, I think also the S&Ps right now, it needed this sell-off. It needed to have a little air pulled out of its, you know, the slope that it was going on right now. And then you look at crude. Now that crude has fallen back a little bit, and you're the gold guy, Tommy, right? I mean, look at what's happened to gold over the past couple of days. It finally woke up.
Yeah,
you know?
No, it was a good break topside last week, and that's why I said I love the idea that you're looking at a 123, 124 euro. Because I can the bottom line. That's my take on it. But guess what? It hasn't happened.
Right, and then you got to look at the S&Ps too because of the crude break with the $5 to $6 move over the past week and a half or whatever.
Yes.
Think about what that's doing to the oil stocks.
Right.
You know.
Yeah.
So part of this break isn't just a tech sell-off. For the first time in months, you have a sell-off in the energy sector, in like Exxon and other companies like that have been on a bull run. You know.
Sure, and I can see, you know, what's also happening, folks, is that the dollar. So picture that the broad market keeps low. If the broad market keeps lower, your probability of rates going higher quicker go down dramatically, and that's why those bonds are staying up, and that's why fundamentally I could see why that dollar would pull back, right? Because it's built in now that, hey, listen, man, lots of rate cuts coming, but if this market stays red for another 3 or 4 weeks, they'll back off that deal a bit. They're claiming they won't.
It all gets back to another 3 or 4 weeks. People start thinking about what their Christmas presents, you know. So
totally.
For the market, it actually starts to become a factor in their thinking, right?
Oh, there's no doubt about it, man. Listen, folks, every trading day you can check out Teddy. Forex forex-trading-unlock.com. That's forex-trading-unlock.com. Listen, man, you have a great one, safe one. We look forward to speaking to you next week, and have a great time at that, convention, man.
FIA Expo.
Yeah, totally.
Thanks, guys.
Okay, have a great
Thanks,
one.
Teddy. You know, I just took a look too on that date of the actual vote for Brexit. It was June 23rd, 2016. So you nailed it pretty much on the head.
Wow.
2 to 3 years, and there was a lot of talk prior to the vote, right? So we kind of have been dealing with the talk of it for almost 3 years now. And
quick.
It's time to see some action.
That's right. Stay right there, folks. Tommy and I are coming right back. We get that out on 268. Nasdaq is off 67. S&P's down 28. Come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 257. You get the Nasdaq off 59. S&Ps are off 27. Percentage-wise, folks, that is approximately 0.9% in the Dow, 0.7 in the S&P, as well as the Nasdaq. So, oil, Tom, where are we at in this oil market?
Quite a number, man. So we're under $70, but we spiked all the way to a low of $69.61. Quite a number. We're trading above $70.80. You're talking about a $1.20 move to the downside, and from there we're up a bit. You got oil trading about $69.88. I put this chart on a 1-minute bar just to see how things accelerated. And of course, if you follow this program, you follow the oil market in general, big move right off the bat. 1 minute bar trading from $70.83 to $70.16, and from there it just kept accelerating up until about 10:47, and we've gotten a slight bounce. But oil under $70, we'll see if that holds or how the day moves forward. And we did get in the den. I know we've gone back. So oil rose. I'm just going to get this number. Oil rose 6.49 million barrels. The expectation was only for a rise of about 2.5 million barrels. So we're talking about 4+ million barrels than they were looking for on that number. So it helps explain some of that move downward.
And, you know, if you take a look at this, folks, this looks like it's going to be an ABC down. It's ripping apart the B point. And if that's what we get, if we get more than 784,000 contracts, which we can because we're already at 338, then you have a structure that is saying $65 oil, which, you know, in the bottom of this consolidation is 63 bucks. So,
not out of the realm. Oil so volatile recently. I mean, that's 1 or 2 days of action in terms of $2 is standard right now.
How's that? 1 or 2 days of action. Unreal.
Totally.
Stay right there, folks. We got Fast Market coming up next from TD Ameritrade. Then I'm Mad Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Have a great one, pal. Have a safe one.
Thanks, man. You too. Love you.
Stay right there, folks. Fast Market come right up. Go get them.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.